Hello and welcome to the Expat Property Portfolio podcast, where we discuss all things property and all things expat, usually in the same vein with expats buying property in the UK. Today we're joined by Liam Smith, who's head of UK regional residential research for Knight Frank. He's based in Birmingham. He's been in property over 10 years. He's got his finger on the pulse. And actually, it's a really interesting conversation. I learned a lot. We talk about upcoming markets, hotspots, places to buy, where we would buy with 30,000, 50,000, 70,000, some of the mistakes we made, where we find our research, how they put together their research, plus a heap of other very interesting topics. So stay tuned, have a listen, and I hope you enjoy. Okay, well, shall we just jump into it? Question number one.
Yeah, no worries.
You know, for those people that don't know who you are or who Knight Frank are, why don't you tell us a little bit about yourself and your background in property and what do Knight Frank do?
My name's Liam Smith. I'm now a partner at Knight Frank. My role in the business is to sort of head up our residential investment teams outside of London mainly, so focusing on UK regional cities for investment. I deal with a lot of our partners sort of globally, and working with our clients that are looking to inward invest into the UK. My sort of background has been sort of 15 years sort of within the real estate business, starting with sort of traditional estate agency. Knew that wasn't really going to be the route for me, but fairly quickly established myself within the sort of the investment world and found it quite easy to talk to landlords and buy-to-let people about what they wanted to achieve. I then got an opportunity to work with a pretty high-profile developer which target overseas buyers and had offices globally, which allowed me to then go and work in different regions, which brings me to my experience of being an expat and sort of understanding the challenges of buying overseas, the worries, the concerns. And I think I've got a pretty good sort of understanding of helping buyers based in Malaysia or Singapore, wherever they might be. So that's me in a nutshell. You want me to give you a bit of an overview of Knight Frank for anyone that doesn't know who they are?
For anyone that's been living under a rock, that's quite rude, perhaps. But yeah, for people that don't know, if you could, that would be great.
Yeah, so Knight Frank are a very established business. They are the globe's largest real estate company. We've got roughly 500 offices across the world, employing 20,000 people, which is great. It's a company that, you know, with that sort of size, you don't lose yourself within it because it's a very collaborative sort of business. In terms of real estate, we're involved in every sector, whether it be commercial, industrial, rural, and of course, obviously residential. But for me and what I do, obviously with having a lot of international clients based pretty much everywhere, having those global offices is exceptionally important. So we've got one in KL, we've got several in Australia now, Hong Kong, China, US. So a massive company. And our strapline is your partners in property. Sounds a bit cheesy, but it really is that is the great strapline. Yeah. APW, we class you as one of our partners and an agent partner. We work with private banks, wealth managers, introducers, and obviously our clients. We want to be their partner in their investment journey, and that's how we see ourselves. So great business to work for. We've got obviously a fantastic reputation. And I think that's really important when buyers are looking for investment. They can trust the Knight Frank brand.
Yeah, and what's the scope of, I guess it's a more personal question, you know, what's the scope of what Knight Frank do? Is it all the way from sort of listing individual houses, say in the UK, all the way through to sort of bringing investment grade projects to the market? And then is there anything else, you know, what's the sort of scope of what you cover?
It's vast. When I joined the business sort of 4 years ago, I was introduced to a guy that shook my hand and said, I'm head of automotive. And I've got to be honest with you, I had no idea what he was talking about.
Yeah.
After 5 minutes, he was talking to me about selling sort of garages for Tesla and acquiring BP garages, fuel centers, all that sort of stuff, e-charging points. So I was thinking, wow, you know, when they say that they cover all pretty much every type of different real estate acquisition and sale, whether it be leasing, they genuinely do. So look, it can be anything from an equestrian state in the middle of the UK to a large scale office building in Beijing. It's massive. And obviously I'm in the residential part of the business, but we've got individual listings, whether they be sort of like pretty large country homes or or nice houses in central London. We've got a huge prime central London team. I think that's what Knight Frank really are recognised for, really, from the members of the public. But it goes far beyond that. And yeah, like we have huge amount of large-scale projects in the regional cities that we ultimately are involved in, from land acquisition, provide all the viability and all those sorts of things and advice for the developers, all the way through to the exit, whether that be a sale to an investment fund, or individual overseas buyers, or even people that are looking to buy them at the end for themselves for self-use. So yeah, it is honestly very, very vast.
Sorry to interrupt, but if you're enjoying this piece of content and would like to find out more about buying property and our key 10 steps to doing so, then pop your details in the link below somewhere and grab a copy of our book, 10 Steps to 10K, the Expat Property Playbook. Enjoy. Okay, well, before I guess we get into picking your brains about maybe some of the good places to buy and the good regional hotspots and that sort of stuff, and your strategy, maybe a bit of that sort of stuff, could you maybe tell us a little bit about your background as an expat? You know, where were you living as an expat, and then did you experience buying UK property whilst you were an expat?
Yeah. Okay. So yeah, I mean, I fell into it. If I'm going to be completely honest with you, an opportunity came up where we were sort of looking at sort of new markets to go into, and one of those regions was sort of mainland Europe. We knew that there was a lot of wealth in Switzerland. There was a lot of UK expats based there, working for the likes of the United Nations and banks and all those sorts of things. So I was flying into Geneva on a Tuesday, living there till on a Friday, so 4 days a week, and back to sunny Birmingham. And I did that for about 2 years. And whilst I was there, I obviously got a really good understanding of, obviously differences and challenges for people buying, whether they're expats, UK expats, or foreign nationals buying into the UK. And I quickly learned that most people are able to buy in the UK and leverage and get finance and buy with a mortgage, which creates a huge opportunity for overseas buyers, wherever they're based in the world. And that's what we sort of like focused on, which then led me to go out into the other sort of regions. And I ended up moving to Hong Kong.
Nice.
So lived there from 2019 throughout that year, early 2020. Obviously, COVID came. And
good time to be there.
Yeah,
Riots, COVID.
Yeah, I was locked in a tiny little flat on the 78th floor of a skyscraper in Hong Kong, which wasn't ideal. But yeah, so I actually moved back to the UK during COVID, and then I've been back and forth since then. So yeah, I mean, I think it's for expats that are typically working abroad. There's a reason why they're working abroad usually, and it's usually because they've gone out for work, which typically means they're quite successful and happy to take a bit of a risk because they're moving their whole life to another country, which isn't comfortable. When you talk to them about sort of investing in the UK, they find it really difficult because a lot of people want to go and see it. They want to touch it, feel it, understand it, and it's not natural buying a property thousands of miles away, certainly when it's not even sort of built yet as well, because a lot of these developments are being sold off plan. I think it's the most important thing is the person that's ultimately selling you the property or introducing the property to you, and having that trust element to it. You know, anyone that's going to be asking an agent lots and lots of questions, as long as they can fulfill the questions and give them the right answers, and don't make any crazy projections, and gain the trust of an expat or a buyer, then you'll do well. And I think that is the most important thing. It's not a quick win. Some people take years to buy. Just be patient with these buyers and make sure they're comfortable with everything. And once they've taken that first leap of faith, that's the hardest thing, because some people can buy, they're capable, they've got the money, but they just
it's the confidence and the we've got a gent in Hong Kong who works for HSBC and was sort of a couple of years standing on the sidelines, looking in what's going on, the occasional meeting, and sort of jumped in earlier this year with one, and now he's on his fourth one.
Yeah.
It is difficult because it's natural for us because we work in property and we've been expats, so we understand how it works. We understand you don't need to go and have a look at it, as long as the builder's quality has a good track record, you don't need to go and feel it or see it. But when you've never worked in that space and you haven't done it before, it is very, very daunting.
Yeah, it is.
Yeah, and I think the key is to do your research, but work with good people. So your role, head of residential investment, Knight Frank,
Yeah.
regional, where do you guys see as, because that's what people listening will want to know is, where are the places to buy? Because that's often, it's in the top 3 to 5 questions, right? Can I get a mortgage? Where should I buy? Where are the best locations? So you guys have a big team. You've got a lot of research people in there. I'm guessing we read a lot of your research. Where do you guys see the best locations to be at the moment?
Yeah, that is a great question, actually, Callum, because for expats, when they're looking at buying and investing, they're flooded with opportunity. There's a lot of developments, there's a lot of cities. So not only do you need to choose the right development, you need to choose the right place, you need to choose the right partner, you need to choose the right developer. It can be quite difficult and daunting. So, Knight Frank have got offices throughout the whole of the UK. We've got sort of the 2 hubs, so headquarters in London and our regional headquarters in Birmingham. We've chosen Birmingham as a headquarters because we believe that the next 10, 15 years, Birmingham is the true hotspot for the UK. And the only reason we're sort of like pushing the city so much is because it's exactly what you've just said there. We rely on research, so we employ economists. I think we've got the largest research team in real estate globally now.
Because I had that was a question I had is, like I say, we reference a lot of your research, when talking to clients because it is so thorough. Yeah. And I did wonder, do you just have sort of a big warehouse full of researchers just crunching numbers, or so you do have a big team?
Yeah. So we have in pretty much every hub. So any big regional city hub, we've got research analysts, whether it be commercial, industrial, residential, and also overseas as well. So, we're getting weekly updates. So it's important for us to understand what's going on in the world and how it affects real estate for us to then obviously advise our clients.
Yeah.
But in terms of cities and where we should be focusing on finding good quality developments to then bring to the market. But Birmingham seems to be the place where there is a real and a true undersupply of property. You come into the city and see a lot of cranes, but it's mainly commercial office buildings that are being built. And that's because there's a huge wave of companies that are moving from London to Birmingham. And with that, obviously, there's immigration into the city, and the population growth is much bigger than the growth of new build apartments in the city. So we believe that is sustainable. And with things like HS2 that are coming up, that's really what this city is underpinned on. And HS2 has attracted all of these employers to come to the city first of all, and that's just the icing on the cake. But we're a good 6-7 years away from the delivery of that. It's the largest infrastructure project in the whole of Europe. So what impact is that going to have on the prices? Well, we need to understand it, and that's what our research tells us. So we can provide it all sorts of guides and updated annual research. Other UK cities, it's not just about Birmingham. There's obviously opportunities up in Manchester. It's still a good market, whilst there's quite a heavy supply of developments being built up there. The tenant demand seems to continue. So whilst that is ongoing, that's obviously a market that's sort of seeing a slight change in the market up there. They're starting to be looking at more of a premium residences, which is interesting, because obviously there's a need for it. So, and then there's other cities like Leeds. Leeds is something that we're very keen on. We're currently advising a lot of developers in Leeds. So that's an area that we think is also going to be an opportunity, and the East Midlands as well. Some sort of lower price points. Derby is pretty interesting and compelling.
Good employers in Derby.
Yeah, massive. That's what it's all about. We look into who's employing, what are the jobs, is there capital appreciation, is there regeneration, is there tenant demand, and the cities that I've just mentioned sort of tick those boxes.
So do you have a sort of framework or a set criteria you would use? Because we try and keep, obviously there's heaps of data points you can reference, but we just say PI, which is population, infrastructure, and employment, and if the more of those things somewhere's got, the better location it's going to be to buy generally. So it's just a good sort of litmus test for assessing a location. So your Birmingham, large and growing population, infrastructure. You've got the HS2, the tram. It's a lot of it's being pedestrianised, and the employment is there the employment to sustain the population and a good quality population as well. And in Birmingham, you've got that with all the employers moving there. So do you have something similar, albeit I imagine it's more detailed, but what are some of the key metrics you would look at when deciding if a location is a good buy or not?
Yeah, I mean, all of those things that you've just mentioned, it's a very good and straightforward way of looking at it. You know, population is key, and supply. That's what we need to understand before we sort of get ourselves into a new market. We're all over Birmingham, so obviously we've been here for a long time, so we understand the market, we understand what's going on in the market, we understand what's going to happen in the market, so we're ahead of it all. If we're going to explore new areas like Leeds, like I've just mentioned there, we're currently going through the sort of the research analytics of the city, because in Leeds what you do have is quite a big private rented sector, which has been fulfilled by inward investment by pension funds, so purpose-built build-to-rent schemes in Leeds, and there's been quite a lot of them built. So has that all of a sudden already fulfilled the need for buy-to-let properties? We don't think it has. We think there's quite a lot still to go, because again, similar to Birmingham, maybe slightly on a smaller scale, there are quite a lot of offices moving into Leeds. The university, the student population is good, but because of the employment, they're retaining their graduates, and that is one of the biggest things for us. So we look at student population and graduate retention, and that's again why Birmingham is so strong, because I think it boasts one of the best in the country. So I think there's 130 odd thousand students in Birmingham, and 42% of them stay.
I was going to say 52. I knew it had a 2 on it.
Yeah. I think it was sort of more than half at one stage. But I think if you do the maths, if a third of those are graduating every year, and 40% of them are staying, that's like 16,000 people, and there's not 16,000 apartments built in Birmingham. In fact, there's a consistent shortfall.
And that's what you need to look at, right? Is, when you're buying, something we talk about a lot is you've got to buy based on what your tenant wants. Don't buy because you like the characterful features or because you like the fact it's next to your favorite pub. All reasons I've bought, but buy based on what the tenant wants, right? And what does a recent graduate that's going into their first white collar job want? Something new, something city centre, walkable to pubs, eateries, entertainment locations, all of that sort of stuff. And I think that's why, personally for me, I think 1 and 2 beds later on make such good buys in these sort of city centre locations. Yeah, Leeds is an interesting one. I think I was reading the other day about one of the largest or the second the largest financial services economy outside of London, is it? Or maybe London and Birmingham. But
no, you're absolutely right. Yeah, a huge amount of, the top 4 accountancy firms have got their sort of their northern regional offices in Leeds, not Manchester. So yeah, that is their main sort of sector, financial services, which again is one of the biggest sectors in Birmingham as well. So yeah, it is really interesting, and ultimately that's why there's so many graduates, because those financial services are the ones that employ so many graduates. They have graduate schemes for accountancy and banking and stuff. So that's what attracts those people to move to the areas. And Callum, you're absolutely right. Tenants, young professionals, they want to walk to work. They want to be able to roll out of work at 6:30 straight into a bar to meet their mates and go for some nice food and stuff. And that's why city centre living has never been as popular as it is now. When we talk about sort of Leeds, Birmingham, we won't just take anything on. They have to be in the sort of walking distance to the CBD areas or the financial districts. So in Birmingham, there's a ring road that anyone that doesn't know Birmingham, that basically surrounds the city. And in a ring road is City Core. And Knight Frank will only get involved with City Core residential developments when it comes to investment, because tenants won't live outside of the ring road, because the public transport in isn't actually that great. If you're living in the city, you can walk everywhere. And you mentioned obviously the new metro, all that sort of stuff. It's a very, very accessible city, and it's quite easy to understand the landscape of it when you start looking at it. So
it is.
Again, it's quite an easy one for investors to really understand, because you really just need to buy within the ring road. Anywhere within that ring road, you should do well in terms of capital growth over the next sort of 5-10 years. So yeah, It's interesting.
And I think when you can then, and it's even divvied up then into separate quarters for you as well, the jewelry quarter and the gay quarter and all of that sort of stuff. But
Yeah.
it is really walkable. So when last time I was over in Birmingham, end of last year, I think I was over there with Drew, who's over there and does all the content and stuff. And we thought, we were training for a run at the time, and so we went out for a bit jet lagged. So we got up early and went out for a run.
Yeah.
And we thought it might be a nice idea to run from the hotel to all the different development sites and just do a little loop and take some pictures so that we could send them to clients. And, we're both very, very slow and we didn't run very far, but we managed to get around all of the sites that we were going to look at. I think 5 of them within the ring road, and it was like maybe a 7 or 8K run, probably 7K. So it is really sort of, I guess the point I'm trying to make is it is really accessible and you don't have to run. You can obviously walk, but it is all walkable.
Yeah, I mean, the beauty of it is that the central business district is right in the middle of the the circular ring road. So no matter where you are in the sort of the city, whether it be the jewellery quarter or Digbeth or Southside or the gun quarter, you're pretty much in the same walking distance no matter where you are. So all of these areas are appealing to these types of buyers. They've all got their pros and cons. Some are areas that need a bit of regeneration, but obviously that creates opportunity because the price point should be a bit better. Some are already established sort of areas that maybe not going to have much more regeneration, but the tenant demand is so high there. So, it's just about understanding the city, speaking to people like yourself, me, and getting a better flavour and understanding about what the opportunity is. But yeah, it all comes back to research, and that's what we pride ourselves on.
For sure. And do you think there's still good upside to be had in Birmingham?
The research sort of tells us that there is, and not just us, by the way, it's not just Knight Frank pinning our sort of hat on Birmingham. It's our competitors, our other big. We
won't say the names.
Yeah, well, I can. JLL, Savills, CBRE, they're all saying the same thing. Yeah. Look, Manchester has got great projections. And so is Birmingham, and likewise places like Glasgow and Edinburgh. I think there's a pattern there. It's the UK. The UK is robust. The UK always goes up in value. There's always a slight correction, but there's never a drop-off in massive property values. There's a 10-year cycle, then a bit of a blip, and then another 10 years. So it is mid to long term. Don't buy a property if you want to sell it next year because you won't make any money.
Exactly. I was chatting to a guy in Singapore earlier this morning, and this is the exact conversation we had. He was like, well, and these were his words, you hear down the pub from other expats and of these sort of unicorns in Dubai or Asia where they're getting double digits. And he's like, is it real? Better than the UK? And I was like, it depends. If you look at the UK, it's basic supply and demand. What drives price? It's supply and demand. And the UK is limited supply. We're not building enough. It's an island. There's more people moving there, so low supply and increasing demand.
One point based on our research will answer your question there, growth of Birmingham, is Birmingham's a quota to meet the demand for the government of how many properties they build in the city, 7,500. The average amount of properties year on year over the last 10 years built is 1,935.
Bloody hell.
Not even meeting half of the government sort of housing target. So there's about 7,000 people moving from London to Birmingham every year since COVID. There are, like I say, 42% of students that are graduating and staying in the city. I mean, just those 3 quick answers there give you a bit of an understanding of that. Even if there was a flood of 10,000 units come into the market next year, which I can tell you now won't happen, it's a sustainable market. There's only 19,000 apartments that have got planning permission that could possibly be built in Birmingham over the next 10 years. And half of those developments will never get built because they're 70, 80-story skyscrapers where developers just won't make any money building them. So, this is a consistent thing in Birmingham, in Leeds, in Manchester. They just don't build enough property, and that's why the UK is so robust. It's a safe haven for overseas investors. Look, there are horror stories. You can buy in some towns and stuff in the north that just don't get the growth, and it's really cheap and it looks great on paper. But
this is the conversation, sort of. It's like, well, I'm from Newcastle originally. I hope he doesn't listen to this. If you do listen to this, I'm not by any means disparaging the conversation. It's just a good case study, isn't it? And, you know, that's what you can get up north. You can get 9, 10, 11% yield, but your capital, even if your capital growth was the same, 5% growth on a £60,000, 2 up, 2 down up north is not the same monetary value as 5% on a, something in Birmingham, because the value is higher, £200,000 or whatever. So
Exactly. Yeah.
As you said, if it's a long-term thing, that's what you've got to be looking at. Cool. Okay, so let's say we've got some example starting budgets in terms of a deposit. I've written down 30, 50, 75 and 100,000 plus. Why don't we have a little bit of a talk about sort of what, if you were restricted to those budgets, what sort of areas, and you wanted to buy right away, you didn't want to save anymore, what sort of locations would you be looking at? Let's start with £30,000 as a deposit. So goes against what we were just saying. I guess that would give you £100,000 property. I'd save more money had I come back later, but
yeah, I mean, if you had to buy immediately and saving more money wasn't an option, which I would say that would be my advice. Yeah. You probably would want to increase your budget to buy in a more established market, because it's safer. You're always going to get tenants and you're going to get growth. However, obviously there is opportunity out there at lower budgets, and I suppose it's more that sort of affordable housing sort of side of things where there is still a constant demand. And I'm not saying to invest in like a real estate investment fund for affordable housing or anything like that. Looking at a city or a town that has a lower profile suburbs where you can get a house that will rent to a family, because there is tenant demand for that, and realistically that kind of price point is that's all it's going to buy you. The only thing I would say with that is, look, buying a house, if you're an expat overseas, you're going to have
lots to do, isn't it?
You can have lots to do. Yeah. I mean, with 30 grand, you're probably going to need to make some improvements as well, like investment in kitchens and bathrooms and stuff, and managing that from overseas will be a bit of a horror show, I'll be honest with you.
Because it's really easy. It's not a heap of money. Obviously, it's a lot of money, but it's not heaps and heaps. A lot of expats would probably have that after being overseas for a few years. And you sort of think, oh, I can buy this for 100 grand, 30 grand down with a huge yield. But it's often, it's better to have a bit of patience, right? And try and do something a little bit more established, as you say, because pay peanuts, you get monkeys.
Yeah. The problem you have is if the tenant profile you really want to go for is professionals, because they're just so low maintenance, and it's the reason why we recommend apartments. It's not just because that's all we've got to sell. There is a reason why we recommend apartments in city centres. Overseas buyers,
because they work.
Yeah, it works. It's a proven. They go up in value. They're in great locations. They're very, very low maintenance. They're built with quality. And that's what young people want to have and live in them, and they're living in them for longer and longer and longer. They're not transient tenants anymore. They're not coming in for 6 months and then moving to another one. They want to stay for like 2, 3, 4 years, because, like we go back to supply and demand, there's not that many good quality vacant apartments available, and they find it difficult to find one. So when they get one, they want to stay in it and are prepared to pay the money. So my advice with anyone with 30k, if you have to buy, that's what I'd recommend. But I would certainly look to save a bit more of a deposit.
Yeah, I'd probably go up to the valleys in Wales and buy a whole street with 30 grand, and I don't know what I'd do then. But yeah, I think, and you see it in the tenant journey. My cousin went to uni in Birmingham and met her now husband there, and you see the tenant journey from they graduated and went to a 1-bed in the jewellery quarter, 4 years there, then they went to a 2-bed in the jewellery quarter, 3 or 4 years there, and now they've moved to a house in somewhere on the outskirts of Birmingham, because they still work in Birmingham. And that is I think when we're talking to clients is, okay, well, whether it's a house, a 2-bed or a 1-bed, they've all got a place. It just depends on the type of tenant you're going for. And I think the low hassle approach is key for expats, sort of set and forget it, put a tenant in there, let them pay the mortgage off. That's really what you want to do. And then if you get more time on your hands and you want to diversify, go for the other bits and bobs. But maybe quick fire on the next ones. We've got 50k, 75k and 100k. So that would give us, say, 25% deposit, 200,000, 300,000 and 400,000 pound target properties to go for. Where would you buy with those brackets?
I think with 50k, there's definitely opportunity in the East Midlands. We've seen quite a lot of growth in cities like Nottingham and Derby, and at that sort of price point, you'd be able to get a really good apartment in Derby city centre, for example. There's quite a lot of high-profile developers that are actually going into Derby, and there's a reason for that, because there's demand. So I think a place like Derby or Nottingham in the East Midlands with 50k would be pretty sensible. With 75k and 100k, I think you know what I'm going to say. It'd be Birmingham.
Yeah.
Because actually with 100k, that's going to get you probably 2 properties in Birmingham. You could split your deposit and leverage up and get maybe a couple of one beds, and that is something that I personally feel is the best strategy. I think we'll probably come on to strategy and what we advise sort of investors to do at a later stage. But yeah, 75k, 100, Birmingham, strong growth, good demand, probably buy off plan, because that's going to be your 20-25% deposit off plan. If it's a 2-year build period, you're probably going to be saving a little bit more money during the build period, and then pay the balance on completion with some more cash, and you're probably going to have a better access to a mortgage rate with a bigger deposit. So that would be my recommendation.
Yeah, I mean, it's similar. I agree with what you said there. Okay, well, let's have a little bit of a chat then on sort of maybe your personal approach and some of your personal thoughts to investing and how you look at it, if that's okay.
Yeah.
So we've discussed a bit about your background in property. How did you get started in sort of buying property yourself? Were you approached by an agent, or did you, having worked in estate agents when you were younger, did you buy then? What was your sort of story into the world of investing from a personal perspective?
I think, it's again, you mentioned earlier, with us being in the industry, it's maybe a slightly easier sort of thing to do for us. My first property was like anyone else's. It was my first time purchase, and I happened to do quite well out of it. It was a buy that we just so happened to have to sell about 18 months later, but there was a huge amount of capital growth. And I looked at even though it's my own purpose, I was always thinking about my investment head on it. Will it actually grow in value? And that's actually been kind of my strategy with my wife, actually, that we typically buy properties that need a little bit of work doing. So this is for our own residential use. So we live in these properties. And we look at areas that again have got good schooling and all that sort of stuff that have typically historically always grown in value. And because my wife comes from a sort of development world, we've got access to people that can come in and do these works for us, and we're buying into a house that needs work, and we're living there for 2 years maybe, doing it all up, and then moving to the next one. Sometimes we have to go into rented before we can find the next one. And that's what we've been doing, and our aspirations are to retire early, just like everybody else, and just like all of the expats overseas. They probably want to retire early overseas or move back to the UK. So side by side of that, it's about sort of looking to grow a sustainable portfolio of investments at the same time. Because look, overseas buyers can't buy a property, do it up and sell it on. It's only because we're in the city that we can do that. It's all about sort of buying apartments that just work themselves, and we don't want to have to worry about them. I'm really busy. My wife's really busy. She's also in real estate. So we're in really busy professionals, just like everybody else that's probably listening to this podcast. Just because we're in the city, we don't want to get calls from tenants, midway through the night, so the boiler's back up. So it's all about buying something turnkey, which is easy. So an apartment in the city centre that we're not looking at selling for many, many years, that we can hand over to an estate agent that's always going to rent out. It's always going to have good quality tenants that don't cause us any issues. And we're always buying from reputable developers, which we know obviously are built with obviously a considered manner, and they're actually quality. So things don't go wrong. So look, my play is long term, and it's all to do with hopefully retiring at sort of 55-ish. So having those apartments for the future and living off the rental income, because we'll leverage, and hopefully by the time I'm 55, those mortgages will be down paid by the tenants' rents, and then we'll have a portfolio of properties that will be able to provide us enough rental income to retire. And that's pretty much, I'd say, most people's strategy. It's pretty simple.
Yeah, I think that's it. I mean, if you are in the UK and you can go and buy things at good value, whether that be auction or, just by being a good negotiator, and you've got a team to do the work, or maybe even you could do it yourself. I think that's an awesome way to make money, right? Because you can add a lot of value.
It's quite unique because a lot of people don't want to live in a mess whilst they're doing it up. So, you've got to be prepared to get involved in it. And like I say, if you're overseas, you don't want to be doing that. And funnily enough, I'll be honest with you, the day that I agreed to move to Hong Kong, we actually completed on a house.
Really?
And I knew that I wasn't going to be living in it because I'm moving to Hong Kong, but I just knew that it was a good buy. That felt quite uneasy, buying a house the day that I'm flying out to Hong Kong with all my luggage and stuff. But because I'm in the industry, I was comfortable with it. I knew that would always see me well. And I'll be honest with you, that's the best buy I've ever had. That's something that we did up during COVID and sold when the stamp duty holiday sort of came out and there was an opportunity to sell it. But like I say, it's only because we're able to do the works. If that wasn't a possibility, then our standard strategy of buying purpose-built apartments that are perfect for professionals, that are going to grow in value over time and give us a decent yield and just ultimately pay off that mortgage payment. I'm not looking to make money on a monthly basis. I just want the mortgage payment being paid off, the service charge. And if I have to dip into my own pocket like £200-300 a year to cover a bit of service charge, then I don't mind, because that's an investment for the pension in the future. Because that value of the property is going up and my loan's going down. So, the equity is constantly going up. And that's how people make money in property. That's how you grow your portfolios.
Yeah, I think it's very true. I mean, when I first started, I think like all young men, you're sort of very or young people in general. I mean, you're very gung ho, and you sort of like, I think my first goal was 10 properties by 30, all paid off. And I could see myself on the beach somewhere in Asia by 31, living the dream. But then as you get a little bit older, I think you realize that, there is actually no shortcuts, right? It's the long, slow, steady cliche that it's a marathon, not a sprint, is actually true. And I think the sooner you realize that smart buying decisions now, or every 2 years or every 3 years, whatever your savings cadence allows, is the best way to set yourself up for the future. And my strategy is the same. It's new, off plan, because it's better for cash flow, good developers, city centre locations, because they're always going to be rented and they'll pay themselves off. So I agree with you. Okay, what would you say to someone just starting out in property?
Take your time. You don't have to rush into things, honestly. Don't be pressured into buying anything either. Buy when you're comfortable, but also ignore that thing in the back of your head that's telling you not to buy, because you're worried about it. As soon as you have the money and you can feel comfortable with that, make sure you've got a bit of a strategy in place that, if Armageddon did come and your property wasn't rented for a couple of months, that you can maintain the mortgage rates. Just don't put yourself in an uncomfortable position, because what you don't want is to have sleepless nights when you're overseas worrying about a property that's being built in the UK. So, like we've covered off quite a lot, we talk about buying with a trusted partner, buying with a trusted developer, buying in the best possible location that you can afford to meet your budget. And if you just stick to that pattern, it should see you well. But I do always say to people that, look, I'm not pushing you to buy, but a helpful push in the right direction is sometimes what people need. You do need to take that leap of faith, that first investment, like you referred to your client the other day. That's the hardest thing. Once they do the first one, they know how it works, they understand the transaction, they get comfortable with it, and they're able to then go again and go again and go again.
That's exactly it. It's like anything, I guess. So, I've seen this before. I understand what happens now. A conveyancer isn't a scary thing. They're here to help me. A mortgage isn't a scary thing, if you know how to go about it. So I think, you're right. It's, and that's one of my big things as well. I think it's all about being comfortable and it's peace of mind. People talk about, well, should I get a fixed mortgage or variable, 2-year or 5-year? What's the best strategy? The best strategy is the one you're comfortable with.
Yeah.
If you're going to lose sleep because your interest rate's going to change, then fix it. That's what I do. I fix it. Even if, the rates are high, I'd rather fix it and just know for 5 years I don't have to think about it. But if you are not someone that's concerned about those things, then go for a variable, if that's the way rates are trending. Sort of my last question, and it's something we've discussed a little bit, is where do you get your research from? Obviously you get it from Knight Frank, but where can listeners, where can they find your research papers and information so that they can start sort of educating themselves?
Yeah, so I mean, any of your clients can access all of our research pieces on all UK regional cities. So we're not just heavily pushing Birmingham. We are involved in most of the markets. So we will always provide our development partners, our agent partners globally with all of our latest research. So they can come to you and we can provide them to you. If they want to just go direct to our website, we do have just a research piece on our website. On there you can find research about anything. You can even find research about what whiskey to invest into as well. So, it's crazy. We've got a new thing called the Wealth Report, which we do every year. And it's ultimately, what other investment assets can you buy into? Where's the
I think I read that last year's one.
Yeah, it's amazing. Yeah. But it's all relative to real estate, and it all sort of comes back to actually real estate might not give you like ultimately the best possible yield and the craziest growth. But one thing is for sure, it's robust. It's usually quite a safe form of investment, bricks and mortar.
Yeah.
It's tangible. So yeah, you can obviously do that. My team, who cover obviously the regional markets, they support all of our agent partners as well. So if you ever wanted to jump on a Teams call and just literally bombard us with questions, to join one of your consultants, Callum, on a Teams call with one of ours, we do that with clients all the time. So anyone that wants to do that, just reach out via APW and we'll happily set something up.
Awesome. Cool. And last question.
Yeah. I thought the last one was the last question.
It was, but I've just seen the ebook on the desk and I need to plug it every time.
Nice.
Have you read the one and only Expat Property Playbook?
I haven't, but if you send it into my inbox, then I will definitely give it a read.
Yeah, I'll send it over. I know I'd ask everyone and no one's read it because everyone works in property or has already bought. So I should probably start asking different people, to be honest. But Liam, thanks very much. That was really interesting. And I learned a lot personally. So hopefully people listening will have learned a lot as well.
That's not a problem at all. Thanks for having me on.
Cheers.
Have a good day. See you later.
Thanks very much for listening. Hope you enjoyed. For those observant ones amongst you, you'll notice that at the start, we didn't say the APW Property Podcast. We called it the Expat Property Portfolio Podcast. And that's because we've changed the name slightly to try and come more in line with what we talk about. So hopefully more people find it and more people will get the information they need. So thanks for listening. Hit the like, hit the subscribe, and see you next week.